Hey guys, Clinton Sistrunk, Colorado Mortgage Team. All right, today I have with me Jorge Armstrong, real estate royalty. He is with Keller Williams over in Green Valley Ranch. Jorge, thanks so much for coming out today.
You're welcome. Nice to meet you again and see you again, Clinton.
We love this guy. He's just amazing, loves his clients, takes great care of
Thank you.
them. But Jorge, you've noticed some stuff out in the marketplace recently that you
I
wanted
have.
to ask me about.
I have,
So tell me,
Clinton.
what are you seeing out there?
I got a question on all this time that I've been doing transactions and helping people for a lot of years, and it's an assumable loan. And I want you to explain the clientele, explain the public, how does that work? How does that benefit anybody that bought a house probably 3 years back that have it at 3.5%, 2.5%, like the way low interest rates? How can they take advantage to that to create more buyers and at the end get more money for their house because they can assume the loan at that rate? It's an
Absolutely.
opportunity for the buyer as well.
Yeah, you're absolutely right, Jorge. I will tell you, assumable loans are something that are way underused in today's market. I mean, we're talking about this is like liquid gold. It's great currency in today's market. So first and foremost, all VA, FHA, and USDA loans are assumable. So if you've got a buyer or a seller that has one of those loans from years ago that has those 2, 3, 4, even 5% rates today, that is now extremely valuable in today's marketplace. Not only can you use that to market a property and to generate more activity, more interest, and that kind of thing, but you can actually get more for the house. Because if somebody's got to take down a $300,000 loan at a 7 or 8% versus taking that same $300,000 loan at 2 or 3%, there's a lot of value there, and you're probably willing to pay a little bit more because you're going to get so much savings on a monthly basis. So we should absolutely be educating people out there that have these loan products. This is something that they can do. And I will tell you right now, if you're out there and you have a low interest rate and your agent or your lender is not talking to you about assumptions and how you can market that to get more money for your property, you need to call my man Jorge because he'll take care of you. He knows exactly what's going on. Now, Jorge, let's talk a little bit about assumptions and just how they work.
When you say FHA, anybody that have a CHAFA loan with an FHA that qualifies as well. Like first time home buyer that bought a house and they were using a CHAFA or government help to come into the house that was an FHA, that still qualifies, right? If I got this right?
So that was a great question that Jorge just asked me. But I didn't know if CHAFA loans were assumable or not. So I called CHAFA directly to find out. And the great news is they are assumable. But there's a couple things that you have to know. And that is if there's a silent second, it's going to have to be paid off through the assumption process, just like if you were to sell the property or refinance the property. Also, the new prospective borrower that's going to take over the loan has to qualify for whatever CHAFA product that original loan was qualified under, meaning they're going to have to meet DTI guidelines, credit score guidelines, income limits, that kind of thing. But as long as they can qualify for the program, then they can assume that nice low rate on the existing CHAFA loan, and that's a huge win in the marketplace.
So guys, the great news are anybody with an FHA, anybody with a VA, anybody that has a USDA loan, and you have a low rate, you can take advantage of that for you to sell the house and also for buyers. If I can have a listing that has or somebody that wants to sell the house and has one of these offers, and right now you're contemplating, well, I have to get into a 7% loan or a 7% interest rate to get the house. There's houses that can assumable or assume the loan, and Clinton's going to explain better how that works, but you can actually get into the lower interest rates like they used to be before.
Let's talk about how the assumption process works because most people have never been through it and they just don't really fully understand what to do, but it's not that complex. So we're going to break it down. Let's say you've got a 3% rate on an FHA loan currently and you want to sell your house. The first thing you're going to do is you're going to call your servicer who you currently make your payments to, and you're going to ask them for what's called an assumption package, and they're going to send that to you. And when you get a buyer coming in that says, hey, I want to look into assuming this loan and taking over this low interest rate, you're going to give them the assumption package that you got, and you're going to give them the contact information for the assumption department with your servicer. And then the buyer is going to go through almost like a loan process. They're going to qualify for it. They're going to submit documents, and they're going to go work directly with that servicer as their lender for assuming over that interest rate. Now,
Nice.
this is where we run into another problem, and that is we've had wonderful home appreciation, which is why it makes a lot of sense to sell, take a large chunk of money, buy a bigger house, and probably why we're having this conversation.
Yes.
But the problem that that
Bringing
creates
solutions.
is, let's say you bought a house and you have a $300,000 loan, and now that house is selling for $500,000, and you're going to turn over that $300,000 loan through an assumption, so they get the low rate, but there's still 200,000 of that purchase price that has to be, thought of, right?
Yeah.
And so a lot of people don't have that 200,000 to bring as a down payment. But we can combine that first mortgage that you're assuming with a second mortgage in the form of a home equity line of credit to reach a CLTV, which is combined loan to value guidelines. So you basically get like a first and second, and you've got the low rate on a majority of the loan, a higher rate on the HELOC on a small amount to make up the cash, and then you have a minimum amount down. Now that's a little bit different of a combination for every buyer because people have different credit scores, different DTIs, and things like that. But we're happy to walk through that process and determine what that might look like for each one of your individual situations.
Yes.
But just know that you can combine the two to bridge that gap. Now, once the buyer is approved with the servicer for assuming that loan, then they go to closing and they sign a bunch of paperwork. Just like if you were taking out a traditional loan, we close the second mortgage at the same time, and there you go. You've wrapped up the transaction, and they are the new homeowner. You've sold your house. And ideally, if marketed properly, the way that Jorge markets properties, you're going to sell that house for a little bit more than you would otherwise because you've got such a good benefit that you're going to give them in that nice low interest rate.
And you get all your equity. You're providing solutions to a new buyer that now has a hope that they can get a better payment for their house. There's a way out and a way of helping the buyer as well get into your house. Maybe multiple offers in a driver's seat, if you call it. Like people can take advantage of this and don't have to worry about, like, I only going to qualify for 7%, 7.5%. Bringing you solutions. Clinton Sistron, Jorge Armstrong, more than happy to help here.
Jorge, what's a good way for people to get a hold of you?
Easy. My cell phone, 720-233-7091. My email, it's my name. It's Jorge, Jorge, .armstrong @kw.com for Keller Williams. And our website, milehighcityliving.com, and at your service. And through Clinton as well.
Yes, please. If you guys don't use Jorge, you're probably leaving money on the table. Please reach out to him and use him. He's a fantastic resource. He's surrounded himself with an amazing team. I am honored to be a part of that team. Thank you so much, Jorge.
You're welcome, Clinton. Thank you very much. I hope you guys got the idea that there's solutions out there, and feel free to call us, reach out. We're also located on 7001 Tower Road, Unit F. This is Keller Williams Green Valley Ranch at your service.
I dropped all his information in the comments below. Look forward to hearing from you.
Have a great day, guys.